with us. But let's move on. We have good numbers that came in from the likes of Berger Paints. The volume surged, revenues were in double digits, while margins also expanded quite a bit. Abhijit Roy, who's the MD and CEO of Berger Paints, is now with us to talk about that. Abhijit, good morning and thanks for being with us on the channel. Great set of numbers coming through. I think for the full year, you've done about 15.5% volume growth, which is remarkable, given that it has been quite a challenging year, give and take everything. What is the outlook for FY24? Do you think you can maintain this kind of 15.5% growth? Can you do better than that?
So yeah, it was a good year last year. So 15.5 overall, and actually the decorative grew at a faster pace at almost 17 plus. But whether that will sustain this year, last year we had some advantage in the first quarter. The growth rates were much higher. But we will have double-digit growth this year as well. That's something which we are reasonably certain about.
All right. Hi, Abhijit. Good morning. You've also said you've gained market share in FY23. What is it at? And double-digit growth you're going to be doing in FY24. Will you be outpacing the industry growth?
So going by figures, whatever has been published, only one or two in the space where it is traded space, I would say two companies has yet to announce their results, but going by what has happened so far and what we know about the market, I think we would have gained about 0.4 to 0.5%. We will be somewhere around 19.3 to 19.4% in terms of market shares in the Indian operations that we have. As far as so that's the scenario, and this year also looks good.
Sure.
Abhijit, hi, good morning. This seems to be on the back of very aggressive sort of push in distribution. All right. What I have is that you've added 8,000, more than 8,000 retail touch points in FY23, which is twice your usual run rate. What will you do in FY24? Will this increase in share continue? I mean, you've got to be available everywhere, right? So will the space continue?
We still have a lot of gap, especially in the south and the west, and that's where we are focusing our attention on. We want to put another 8,000 this year. So that's the aim, which we want to do. And we think that we should be able to do that and execute it on the ground.
I think just coming back to that market share question, that was a pertinent one, given that there is quite a bit of competition that's, entering into this space. I'm sure there could be a lot of, a discounting, perhaps a price war as well. You never know, given that large groups have now entered into the space. Do you think you may have to perhaps sacrifice on margins in the very near term in order to continue with, volume growth? And if yes, what is the ballpark range that you're looking at in terms of margins?
So, sorry, as of now, there is no competition. It's going to happen only towards the end of, the year. Quarter 4 onwards is what has been indicated. All other players are already there. And, I don't think, we need to be overly worried so far. Yes, there might be some amount of, intensification of competition towards the end of this year when the entry of one of the largest player there in the building material space happens, but we have to see how much of dilution is required or not required. It will depend on what the momentum is in the market for us. In that case, we may have to tactically do something, but that's something which only time will say.
So in terms of margins, just to follow up there, this quarter, in the quarter gone by, you saw a bit of a dip in your margins, but overall still holding on to that 15% level. Is that a benchmark that you're looking to hold on to even in FY24?
So there will be some improvements only because, the gross margin has improved, but there were some one-off expenses which we took this quarter, which was the Sandila plant which kicked off, so we had to spend some money there, which was, basically the recruitment of all the workforce and, managers, officers, etc., and plus some other expenses which were one-off, of nature, which will not come in the future quarters. There was also the Andhra Pradesh school project which we did, where there were some outstanding amounts, beyond 1 year, which we, took provision of, but which we will get back, either this quarter or the next quarter. So therefore, it dipped a little bit in terms of percentage in EBITDA, but that is going to move up again in the first quarter itself, and onwards it will be probably be at a range of between 16 to 17%.
All right, 16 to 17%. Got that. A couple of more questions, Mr. Roy. If you could tell us, as of now, I believe your capacity utilization levels is around 50%. At peak levels, what kind of revenue can you do? You could correct me on the utilization number as well. And last year, you ended with revenues of around 10,500 crores. Peak revenue potential is how much?
So, the capacity utilization that you mentioned is for the Lucknow plant, which is around 40 to 50%. We started off in the month of February. And so in April, it had reached about 40 to 50% utilization levels. That will progressively move up as time progresses. But overall, the capacity utilization is at a much higher level of 78% almost, which is, perfectly fine. And, we don't see that, being a troubling factor. So that is how it is, in terms of cap utilization. We probably will improve on it, as the seasonal months come up.
So at peak levels, then maybe you could do around 12,500 or 13,000 crores with the current, gross block that you have.
That's right. No, even more, probably around 13,500 odd crores.
13,500. Okay. Yeah. I just wanted some clarification on this other expenditure. That seems to have gone up a goodish bit. And if I compare other expenditure with sales, as a percentage, it's gone up by around 150 basis points. Why was it higher?
So that, as I mentioned, there were some one-off expenses which we took.
Okay, that's the one.
On the overheads, the overheads, resulted in an increase of about 1.2% straight away. And the advertisement expenses went up, this quarter. Last year, in this quarter, we had cut back a little bit. This quarter, the ad expenses went up. So when you see the results, you will find these two changes.
Just one final question. Last year, the industry on the whole had taken 25% price hikes, but it was quite a challenging year in terms of raw material costs going up as well. Now, with crude prices cooling off, will the prices be rolled back, or will the same prices continue? Any sense that you can give us?
So actually, Sonia, we did not or could not pass on the full price increases that happened in the raw material prices. So that's why you would have seen that almost all paint companies, the gross margin got contracted. We have, now reverted back to a normal status, whereby we are in the range of 38 to 40, where we normally remain in the gross margin area. So it's not as if, excessive amount is there and we need to therefore give away something in the marketplace. As of now, if these prices hold at the raw materials, I think there will be status quo in terms of the spends and in terms of the pricing which is there in the market.
Okay, all right. Thanks a lot, Mr. Roy, for joining in. Wishing you a good year ahead, and we look forward to chatting up with you during the course of the year.
Thank you.